Good morning, this is Steve O'Hare from Signal Centre. Today's Wednesday, the 18th of August 2021. I'm on my own today. Joe's on the holiday, so while the cat's away, the mice will play, I suppose. Taking a look at headlines overnight, it's a more positive session in Asia where Japanese and Chinese and Hong Kong indices made gains after a shaky start to the week. US markets suffered a tough 48-hour period, but it bounced back a little bit overnight. The S&P dropped back from a record high. In central bank news, the RBNZ left policy unchanged rather than increasing interest rates, but it also signalled a plan to tighten policy in the near future. UK prices rose by 2% overall in July, a slower pace than in June and below expectations, but this cooling in inflation is not expected to last. We'll see about that. Today sees US housing data and weekly crude inventories along with the latest set of Fed minutes, which should provide further colour on the outlook for US policy ahead of the Jackson Hole Symposium at the end of the month. That was courtesy of IG Market Call. Thank you very much for that. So let's dive into markets now. This morning I've taken a look at, let's make this a little bit bigger and get rid of this. I've taken a look at crude oil on, you'll be able to see the video on LinkedIn later, YouTube, wherever it is, and really looking at that on a more medium-term basis. It looks like we're in a decent correction. This is the weekly chart that I highlight. Now, if you look at it, it looks a bit toppy, but if you look at it as a monthly chart, it looks very toppy indeed. This was an indecisive month last month. This month has been very bearish. Previous month was very bullish. That is an evening doji star formation. So that shows signs of potential further deeper corrections. We've got the long-term downward trending resistance lines that will act as support. That doesn't come in until about $61, so a little bit of a way off really at the moment. If we look at the daily chart, also we've broken down below this upward supporting trend line. We tried to recapture ground above it and failed, and we've moved lower, so that doesn't look too clever either. Let's let you know what we're talking about. We're talking about commodities now. So shorter term looks a little bit messy. We've sort of like got this support level coming in at 64.89. A break below there would confirm our thoughts on a further or deeper correction, really looking to sell in front of that downward trending resistance line. However, we do have inventories out later, so expect a bit of spice from that. Looking at the gold, also we're trading just below this 1800. That'll be a bit of a psychological level. Above that we have the 1832.33 level, but we've had, obviously, Sunday night we had the big spike lower, cleared out a load of stops, and since then prices have reacted higher, so it doesn't look too bad on maybe a daily chart. If we look at the previous action, it hit the support that we've had before, so it plays out really nicely. And then we've had this extended run, although yesterday was a bit of a doji, bit of an undecided day. In the gun to head, I went short of this, and that managed to hit target, just failed to clip the stop, thankfully. And yeah, we'll see. We're trying to sort of like retest this 1795 area, but as I say, 1800 above it and 1808, 1810 above that before the 1830 level, which will be quite important. Let's take a look at cryptos. What fun these are. 45,000 trading on Bitcoin, so it is stalling in front of resistance. This is the daily chart. On the long-term chart, we've still got the potential for a head and shoulders formation, but I won't drive down into that. Here we've formed a double top formation. The measured move target is down to 42,800. This has been confirmed on the 4-hour chart by a break below it, and again we tried to recapture ground above that, but this looks quite entrenched in maybe a more minor correction down to around about the 42,500 level. Below that we have decent support at 41,000, which was the capped gains all the way back in July. So slight bearish tint. Really need to capture ground above this 48,000 before we start to think about the potential for hitting the measured move target of this ABC correction Also, the double bottom or treble bottom comes in about 52,500 on Bitcoin. Taking a look at indices. Let's start with FTSE. We'll look at the shorter term charts, really focus on them. We got up to 72.35. This is on the daily chart. Since then, over the last 3 days, we've been pretty sideways. We've had spikes in directions, but managed to close at the same level on both on the 16th and 17th, and we're trading around there now at 71.66. On the short-term chart, we can see we've had, again, it looks a little toppy, really needs to capture ground, but the 4-hour bearish outside candle will be confirmed at 10 o'clock UK time, and that could lead to this sort of spike higher that we've seen overnight in the Asian indices failing. But we won't give up on it just yet. We've got the same sort of candle on the DAX. Again, really need to get above 15,973 to shrug this off. Really the support below at 15,805. Buy and dip seems to have worked so far in all of these indices. Will it continue? On the daily chart on DAX, we've got a little bit of a reversal formation or candles that are hinting at a reversal. Again, still holding on to this 15,800 level is pretty important for the DAX. On the Dow, all-time highs, obviously, 35,629 was posted a couple of days ago. We failed to break that yesterday. But got close. We formed a bearish engulfing, almost a bearish outside bar, not quite, but we can consider it that, I think. And price action has been muted overnight. So a real opportunity for the bears in the market to try and drive home some advantage if they can get prices below 35,127. Otherwise, the support will come in this afternoon. We'll have to see. NASDAQ looks pretty toppy at the moment. You can almost see this triple top, head and shoulders type formation forming at the top of the range. We didn't manage to get close enough to the 15,184 all-time high, and we posted a hanging man candle and this really bearish looking, ominous looking candle. Still quite muted overnight, so really have to sort of see how the price action plays out. This is the sort of thing we were looking at doing yesterday. We were looking at selling a rally in front of this downward trending resistance. Didn't quite make it, but it did manage to hit the targeted area at the bottom of this expanding wedge formation, which is at the top of the market. Very, very difficult formations to trade. On the S&P, the 4-hour chart, we can see again this bounce back as the session closed and overnight, but it seemed to be giving up gains at the moment. Trying to form a bearish engulfing candle on there. Aussie 200. This is a trade we took overnight, looking to sell at 7,500. The stop was at 7,540, and it got very, very close to it. 75.40.3 looks like it triggered the stop on there, and prices have reacted lower, now trading at 74.91, so may have been a bit unlucky with that Aussie 200 trade. China 50 on the 4-hour chart just posted a shooting star after hitting a previous resistance level, so maybe indices starting to give up these gains. On the Hang Seng, we're looking to sell a break lower, and again, you can see this rally overnight starting to fade. So maybe the bears are starting to capitalize on the concerns around further lockdowns. New Zealand obviously having a major lockdown after one case, and I'm sure we're going to see some more fireworks and delay maybe in the world opening up. So that's probably a concern which the indices now are starting to think is more of a concern than we've talked about before. So let's take a look at FX. Joe normally runs through these. I'll give you a more A-lister type approach to it. Only joking, Joe. So Long-term chart on the euro dollar, we're in a bit of a corrective phase. Dollar strength is causing that. We still feel there's a little bit more on the downside, maybe on euro dollar. If this ABC formation plays out, we should get maybe a swing back even to 116.13. That's what it looks like. The daily chart, pretty significant losses yesterday. We've broken down through support overnight, and we've recaptured ground above it. If we fail to break this support, then we could quickly correct higher, but I think we'll find resistance coming in around about the 118, 75, 80 level. So trade I did today would be buying a break higher, but quite high risk, low confidence on that. On cable, let's take a look at the price action on the weekly chart. We've broken below the upward trending support line quite significantly and continued over the last couple of months with that. Let's break it down to a weekly chart to give a little bit more granular on that. This is a little bit more significant, although we did post a bullish hammer reacting from a previous swing low. And also, if you take this level at 135.15, yeah, 135.15, that was a previous resistance level, which has now turned into decent support. Didn't quite get down there the other day on the 19th, but looks a little bit bearish as we're running it into today. On the 4-hour chart, we can see potential for an inverse head and shoulders, maybe, if we hold on. But if we don't and break this 137.20 level, then 135.75 looks under threat. So decision time for cable also. Let's take a look at dollar yen. Dollar yen, this favors the sort of the price action. We've formed a higher low. So that's potential for a continued uplift in the dollar price action, trading at 93.06 on the dollar index. Dollar yen looking to buy around about 109.25. That's in line with this trend line support and the failure to break back below the 108.72. Looks like we've had a nice little reversal here. So potential for the dollar to push higher, leading to obviously euro dollar questions and sterling dollar questions as to whether they can hold on to the levels at the moment. Aussie dollar feels like a little bit different. Again, well, a little bit the same rather. The dollar feels stronger. We're quite happy to be a bit more aggressive. New sentiment is a little bit weaker across the Aussie pairs, so happy to sort of sell into previous support now turned into resistance, coming in around about 72.89. So that's the trade idea for today. So what have we got coming up? The day ahead, economic calendar 1:30. We've got Canadian CPI July prices expected to rise 3.1 year on year. So watch Canadian crosses for that. US housing starts and building permits starts to rise 1.1 and permits to rise 0.7. Obviously watch US dollar crosses for that. And obviously we've got the 3:30, we've got US EIA crude oil inventories. Stockpiles fell last week by 447,000 barrels. So watching Brent and WTI very carefully on that. 7 p.m. tonight, FOMC minutes. So policy was left unchanged at the last meeting. This will provide a chance to see how discussions unfolded, especially regarding the economic recovery and changes in inflation. So really watching US indices, US crosses, gold, things affected by the dollar. So yeah, seeing those minutes will give us a little bit more clarity, and hopefully will give us a little bit more insight as to when we expect the scary interest rate rises and the tapering, obviously. So thanks for joining me today. You can actually see me now. Thanks for joining me today. I hope it's been informative. I hope you've enjoyed it. I look forward to diving in and discussing the markets tomorrow morning, all on my own.